relatively positive after that manufacturing readout from China. What did you make of it?
Kate, it was actually a good day for the Aussie market. We rose by 0.3%, and although that doesn't sound like much, it is in comparison to the US market, which was actually down by 0.5% overnight. One of the things we were keeping a close eye on was China, and that's because yesterday we saw the Australian share market breaking that 6-day winning streak after we did see money market yields in China surging. We saw the 7-day repo up by 44 basis points to 4.02% yesterday. Today we also saw a rise up by 65 basis points to 4.67%. So it does look like the central bank in China is refraining from adding liquidity to the system. So markets are going to be keeping a close eye on that. But I guess slightly offsetting that is that we did see the HSBC flash PMI numbers, the manufacturing numbers, coming in ahead of expectations, a read of 50.9. But in terms of the top performance, it was really the banking stocks, the financial stocks, which were the outperformers. If we have a look at the top 20 blue chips on the Aussie market, the top 4 today were all financials. They were AMP and then 3 of the big 4. We saw ANZ, CBA as well as Westpac outperforming. On the flip side, if we have a look at the companies underperforming, they're largely the ones that are impacted by a high Australian dollar. And they're stocks like Newcrest, which was down by 1.6%. It also had its AGM today. Also QBE Insurance, BHP Billiton as well as Westfield. So all in all, outperformance by the Aussie market, great to see. And some better numbers coming out of China, certainly helping. But we're still monitoring that China money market situation.
Julia, what was your impression of Wesfarmers today? In the end, the stock price was fairly flat, but we got a slightly disappointing result out, particularly from Coles. Target still seems to be a problem child for the group. What did you make of the result on balance?
It's interesting, although we did see Wesfarmers shares down by 0.2%, we actually saw a bigger fall in Woolworths shares today, and often we compare the two. And I guess the expectation is that if Wesfarmers came in below expectations, that we might even see the same from Woolworths. If we have a look at the importance of this result, it's Coles, Bunnings as well as Kmart, which makes up the bulk of earnings. Around about 80% of earnings comes from these 3 businesses. So I guess in terms of Coles, this is really where we did see the disappointing result come through. We saw sales like-for-like basis coming in at 3.4%. Now, we knew that momentum had been slowing down, but it was still below what the market had expected, given that the last quarter we'd actually seen like-for-like sales growing by 4.5%. So the food and liquor part of the business was quite disappointing. Bunnings, we did see momentum actually speeding up a little bit, so positive momentum there. Last quarter it was 6.9%, this quarter 7.1%, and Kmart we also saw a turnaround. Last quarter like-for-like sales was actually negative, but this quarter we did see a positive 2% result. The other thing the market was closely watching was Target. It is a perennial yeah, that's it. Underperformer, and we did see the same thing this time around. Last quarter, sales were actually down on a like-for-like basis by 9.8%. This time around, a little bit better, but still a loss, down by 5.2%. So Wesfarmers, we did see a heavy loss in the morning, but by the afternoon, the losses had pretty much disappeared, down by 0.2%, and in the end, Woolworths shares doing worse than Wesfarmers.
Julia, AGM season in full steam today. I know you had your eyes on a couple in particular. What were you watching?
Toll Holdings is one I was keeping an eye on, and that's because Toll is often seen as a bellwether of the Australian economy. It operates in so many different sectors of the Aussie economy, and I guess if we have a look at Toll, some of the commentary coming through showing that although the market is pricing in a cyclical revival, Toll hasn't actually seen any evidence of that. So Toll coming out to say that they haven't seen an improvement in the economic environment here in Australia. Some of the commentary was also quite interesting in terms of sectors. For example, in the mining sector, they're still saying that coal volumes are very slow and that they're still seeing cost cutting from their major customers. Retail also continues to be soft. And if we have a look at Toll, I guess the shares were up by 2.8% because despite all this commentary about a difficult environment, it is still predicting that underlying profit is going to grow, and that's a result of productivity as well as cost reductions. One of the things we're watching with Toll is the Toll Express business, and that's because we're seeing increased competition in this area, in particular from Australia Post, which is really ramping up its business in this space. So Toll Holdings doing well today, but the commentary around the general Australian economy are not too good.
Okay, Julia, just finally, Newcrest also holding its AGM today. That was a fairly contentious one, considering what we've seen from the company over the past 12 months or so. Did you follow that AGM from the gold miner, and were there any takeout comments for you?
I think Newcrest is coming to a period of change, and it's coming to a period of change because we're going to see really a change in management, CEO, chairman. We're going to see a change at the top over the next few months, so we're likely to see a change in strategy as well. Shareholders are unhappy about past performance and issues around governance as well as pay, but I guess just looking forward, it's full year forecast 2 million to 2.3 million ounces of gold. Now, we were looking to see whether that might have been increased upwards, given that the last quarter production actually came in slightly above expectations. But I think the key for Newcrest Mining in this type of environment is to try and reduce its all-in cost when it comes to production, and that's being dragged down by some of its underperforming assets, and their assets like the Hidden Valley, the Telfer, as well as the Bonrico assets. So really the market looking to see what Newcrest Mining is going to do with these assets, and they're probably going to look at a sale of these assets like we have seen from some of the other gold companies which have sold expensive Australian assets, or we'll probably see them closing some of these assets. So I think that's really the key to Newcrest Mining. We know that it's a difficult environment for those gold miners, but we're just watching those 3 underperforming mines and to see what Newcrest does with those mines.